Hello, Sky Traders. Welcome back to a new recap video. This is Mina, your trading coach, and today we're gonna discuss the pound yen. As you may know that on a weekly basis, we do these weekly recaps and forecasts, and we choose different assets, different financial assets, markets, and we analyze them, what happened over the past weeks, what's likely gonna happen over the next few weeks, and discuss important updates. Also, don't forget to subscribe to our TikTok channel and Instagram channel because we drop some important videos there. Last week, it's been hectic on the crypto environment because what was happening for the FTX and Alameda, Binance. So we covered all of these topics on our TikTok channel. So don't forget to go and check the videos there. Also, our podcast on Spotify, where we discuss morely and focus more on the psychological aspect of trading. So don't forget also to check out the episodes. We have them in English, we have them in German, and soon we're gonna have them also in Arabic. So without further ado, let's get started. As what we usually do is a top-down analysis, monthly, weekly, daily, 4 hours, 1 hour, 15 minutes. So what happened over the past months, we're in a consolidation phase, like over this region, again, collecting orders. And if you're thinking from a retail perspective, you're gonna think that okay, we broke the consolidation, so probably price is gonna go even higher, right? But the problem in here is whenever we wait for a consolidation to be broken, we need a high pressure buy candle followed by another 2 or 3 high pressure buy candles just to confirm on the trend or a change in trend. Because usually what price do and assets do is they're manipulated, right? And Forex is one of the most manipulative assets out there, right? So usually buyers are trapped after these kind of consolidations, right? High pressure buy candle followed by high pressure sell candle. So in order to confirm on the trend, we need to wait a rejection from this area, an order block, and continue the uptrend. And probably you can hit this level. Or if this month closed below this candle, high pressure buy candle, with this high pressure sell candle, we can expect a downtrend actually, where price consolidated, collected all of the sell orders out there, kicked them out of the market, and then continue further move to the downside. Because also this is the liquidity void area, right? So this is an important level. It was a market structure that has been broken by high pressure sell candle, and now we're trading back to this market structure. So this is a really important level. So if this high pressure sell candle broke below this high or breaks below this high pressure buy candle, then try to trade back, we can expect further move to the downside. And this is going to be the end of the channel or the end of the trading range, right? Let's move to a weekly time frame. All right. So we had this pump in price and its order block, right? And also this was a consolidation phase. So a lot of buy orders were placed and scattered over this area. Tried to take them out, failed, order block, high pressure buy candle, and then broke this market structure, right? Now it's happening again here. Consolidation, took out all of the liquidity, and if we broke below this high pressure buy candle, we're gonna reach out to this level at least, because this is the next liquidity hunt, right? So in trading, usually we have if conditions. We don't say, okay, this is gonna happen, or this is our anticipation. We usually say, if this happens, this will probably happen. If this happens, this will probably happen. So again, it's a game of probability, it's a game of if conditions. So we're waiting for some signs, we're waiting for some confirmations to prove our point, right? What if we didn't have a high pressure sell candle in here and we rejected the high pressure buy candle? So we're going to continue the uptrend, right? It's not necessary to have less high pressure sell candle. That's why it's a game of probability. This week is also full of important events. And again, whenever there's an important event, we can expect further volatility. So we have let me check. Yeah. So we have the GDP growth rate Q over Q for Japan. We have on 15th of November the unemployment rate, which is going to have high impact. And we're going to have balance of trade. So a lot of events over the next period. And during these events, either we can expect further move to the downside or further move to the upside. But, however, this is an important area. So what we can expect from here, slightly jump to the previous levels, previous market structure. And if we're going to move further to the downside, we're going to have a drop, taking out this liquidity. Further move to the upside, to the market structure, or the previous buy candle has been broken. And then further move to this level. Why this level? Important liquidity level. You can expect further move to the upside, and then taking out all of the liquidity in here. This is for a sell model, where this is our trading range. When we can expect that? Important announcements to have the sufficient liquidity to do so. So if there's an important announcement or something, we can expect a slight move to the upside, and then we can have like an order block, and price is gonna hit immediately down to the downside, right? Okay, how about a buy model? A buy model, if price refused and rejected from this level, then it's gonna consolidate slightly at the previous market structure to collect some liquidity, and then expand further, move to the upside, trade back to the market structure that we are gonna break here, and then further move to the upside. So we have two models. So it's not necessary to enter here. It's not necessary to enter here. It's not necessary to enter here. There are a lot of opportunities, like 3 or 4 or 5 opportunities out there. So once we have the confirmations, we can enter. It's not supposedly to have the perfect entry, because there's no perfect entry. There is entry with high probability. This is the perfect entry, right? This is like the view, the general view. To fine tune this view, you can drill down to the lower time frames. Then you can see actually the models: expansion, consolidation, expansion, consolidation, expansion, retracement, expansion, consolidation, expansion, consolidation, expansion. And now probably we're gonna reverse. This is gonna be the next level, or this is gonna be a retracement and then expansion, another expansion. So again, we're waiting. This is the new market structure, right? If we continue further to move to the downside, some liquidity grab, upside, downside, upside, downside. So we have two models, and both of them, we have like 3 or 4 opportunities, right? So again, trading, as we usually say, it's game of probability. It's game of anticipation. It's not game of gambling. It's not game of that we need to catch every single pip, every single move. If you focused on catching every single pip or every single move, definitely you're gonna lose in trading, right? So thank you so much for watching. I focused on reducing the time of the video, make it to the point, not too long, so you can exactly understand what happened and what's going to happen, probably happen, likely happen in the future in the market, and to be as more informative as possible. And what we usually do in our recaps or weekly recaps and forecasts is to focus more on the concepts that we teach rather than the what's going to happen or the entries, right? We also discussed a lot of entry opportunities, we discussed some concepts, and that's really important. So thank you so much for watching, and see you in next videos.